Okay, I believe we are live now. Please let me know if you can hear. All right. I'm going to type in a little comment here. And we'll put that on our little ticker. Let me go ahead and get rid of our overlay. So now everybody can log in there. Go ahead and feel free to type in any questions. I can see them from the overall setup. And what we will do is begin with, well, let's talk about first the overall general nature of the market from a daily standpoint. That's always an effective location to start. Let me minimize that for myself. Right, so if we're looking at our ES daily, very interesting from what most of you would look at as an overbought setup from our general daily. If you looked at the INX, we would see it as well. We got very overbought right here as we came into the new year after the big bounce. We had our buy signals coming into year end, and no surprise, we hit the targets. And it was interesting because, I mean, again, like I said before when I talked about it, well, right at that time, you know, this dumping that was taking place during all the buying clearly indicated that, to me, that somebody knew that things were going to be turning around to the positive side. Now, within this move straight across, most people are like terrified of the setup. Nothing really to be alarmed about because, as you can see here, we've alleviated overbought. And some people are saying, what do you mean? I'm looking at my stochastics and all these other things, and everything just says clearly way overbought. And while that's true to a large extent, what our extreme histogram lets us know with these histograms moving lower is that you've eased what would be considered an imbalance from a buy and sell order standpoint. And so it's that fluctuation that lets our extreme histogram come down, and we get into oversold situations where we dip below this red line right down here, and that lets us know that we have oversold. Well, oversold can happen very quickly, and overbought can happen very quickly. And so those transitions aren't going to show up on moving average based indicators. So from that standpoint, let's move to some intraday setups. Let's go ahead and just run through a few of what is going on right now. That is a very bullish setup for Apple so far within that 78-minute setup, so that's nice. We are going to talk about Apple from a daily as well as the weekly signal. Some interesting weekly setups there. 15-minute standpoint, we're talking about is we got all these buy signals, came up, got overbought, and now reaching near oversold at what a lot of people are going to refer to as a double bottom from an intraday standpoint. Always interesting. Google shot up really quickly towards it, and we were expecting this back over here, and I mentioned it when we got into this point because I was looking at some of the additional indicators, and I was saying, well, it's likely that we're just going to flatten out and then it will take until today, and potentially it could even last an additional day before you got up to that 738 range. Came right up to it and then pulled back a bit from it. No real shock on that. Let's see, I need to move my graph up there. So we're going to go through a bunch of the different ones, all of the basics. And if we have an audio issue, please let me know if it's just because I moved the HD level up a bit higher, and I can always back it off a little bit just so that your processors and that don't get overwhelmed, because I don't want you to have a situation where it's a little bit too tough for it to maintain, because we can get pretty high on the bits per second in and going into the HD camera setups, and that does require extra move. Orange dots a buy, all the different dots that you see, and this is a good point because I get used to it, and you're going to understand something. I never intended for there to be dots. It was never really about that for me because I have all the indicators, so I don't need the dots to tell me when the setup is there. I can see it. But what the dots represent to me from a code standpoint was I was able to identify various footprints. And so just from a standpoint of identifying them, I gave them individual names. And that's just from a convenience standpoint. I can say, okay, I've got this footprint, therefore I'm going to call it X. So when a colored dot, from your standpoint, you see, comes down below, that's a buy signal. And the dot itself represents the stop. Now this is the debate. It's like, well, is it cleaner for me to just give you a dot and then the target dot, or do you want to see the actual value? I mean, I can replace the dot with the value. In this case, there's the value right there. And likewise, going back here for this stop, I went ahead and I just made these alterations just the other day. Only did it for the hawks. Because like here, you could put your stop in, and I was like, okay, do I put it, have it say down target? I mean, how much information is necessary to get a general point across? I want to be as accommodating because I don't need this information for me. It's more about helping you identify these setups and the situation. So in this particular case, we're looking at PCLN, 78-minute buy, and it's giving us 659.70 target. I mean, that's a real legitimate upside target there. So, I mean, no pretending with that. Let's see here. From an overall projection standpoint too, and this looks actually positive. It's interesting because in the daily, and not uncommon to most stocks right at this particular point, they're showing large degree of overbought. And those were original, kind of setups that originally happened. And this gets us into some of the more complex issues as it relates to people with the indicators. Because at the end of the day, the most effective technique for the dot setups, not to mention any of the setups, is to have all the indicators. And while I'm showing you this simple chart that's blank for the most part, I don't consider that to be as effective as having, all the details on it that I look for, because as you get used to it, the information that's being provided to you is pretty incredible. From my standpoint, just adding the extreme histogram, is a huge improvement. Now, it popped in right there. I prefer to have it over price. To some people, that's too cluttered. Now, to do that, we've got the indicators. You want to make sure your extreme histogram reads no axis, and you put it into subgraph 1, which is price. Just like that. And then I click OK. And then boom, it appears right over it. Now, so looking at this PCLN 78-minute, I mean, I clearly could see when it got overbought. I knew that when I get a lower reading on a positive extreme, it's a warning sign. Still reading very positive from my expanded ratio histogram. So then I would just turn to, in this case, either my up-down power or power mode. And so what do? I just right-click. And, well, it's right at the bottom of the screen here. Let me just draw this down a little bit so you can get a full gauge of it. Right-click, power momentum, you click it, and boom, it appears. So it didn't really become negative until this bar right over here where the yellow popped up above. And then it's at that particular point you say, okay, yeah, now the shorts have really taken control of the general setup. Well, on a 78-minute chart, that's, it's paint. You're watching it dry. It doesn't take forever. And fine, that's just one of the realities of trading longer time frames. But is this better than just looking at an overall daily chart? I think so. I think it gives you an inside move far in advance. Now, some people are asking me, well, can I go to like a 200 plus minute, and doubling that? Sure, you could do, the 154 minute, and it would just break up 2 days into 5 bars and so on and so forth. Some people say 78 minutes, that's just so esoteric. No, it's 5 equal bars. If you do a 60-minute chart, you've got a half bar. How does that make any sense? Just throwing it out there. It's different preferences. You can still use 60 minutes. Nothing wrong with it. Okay, let's look at... Let me see, I need to move this out of my way. SHLD and Netflix, sure, we're going to be going over those as well. Not a problem. Minimize that. But what I wanted to point out here, and this was an interesting thing because I had some people who were trying the indicators for the first time, and they were noticing an interesting discrepancy, that sometimes they were getting a signal for a dot alert that came from my expanded ratio histogram, whatever the name, it didn't really make any difference. Those were the orange dots. But it wasn't necessarily showing up on their chart. And so we're looking at the actual code right here, which more than anyone really needs to know. And what it basically is well, in this case it says ERH, which is expanded ratio histogram, orange long signal. But where it differentiates and in code language, I can simply get rid of a plot. So we're plotting an orange dot right here, but under certain situations, I didn't want that to show up. Now, I can remove the orange dot. I can't remove the alert there. So in this instance, I'm going to have to go back through and add, another 85 lines of code so that this exclusion that I'm creating right here just doesn't show up in the first place. It was just easier to eliminate it than it was to have it go in, and that's the reason where in some cases you'll find a chart where you've got the signal but you don't see a dot. And that's simply because I hadn't even intended it to be one of these situations where you would need to have an alert set up, but it becomes convenient. And so why not? So I make those adjustments to accommodate, because my expectation was always that I would be in front of a computer, and then also people who are using the indicators would be in front of their signal most of the time. Now, from an alert standpoint, this is what our alert setup looks like from an alert screen, and fairly simple to go ahead and add into these setups. You can go to Format Analysis Techniques, and what happens is all of the different setups are right here, and I can merely click on them, add them, remove them, back and forth, and even set up the order with which they appear on this setup. And so in this particular case, I actually did it for the entire group. You can go to Alert, and let me widen our screen real quick. I'm just going to shift it over. That way you'll be able to see it. So if I right click, and it says Alert, let me do it a little higher up here so you can see there's the alert. So it's enabled, and in this particular case, enabled once per bar. Now you can do the same thing from this radar screen, or you can do it from the actual chart itself. So let's go to a chart, and we can do it. So here's a gray dot that came in, and that happened to be on the pink dot. Well, you can literally format your pink dot, and bring that back out here. And you would click the alert. So in this case, I could enable the alert. You could pick which type of alert you want, and then you can start to get pretty extreme with the overall setups. You can configure it. You can have it make a noise. You can have it pop up. If I click here, I can have it talk to me. I can have it say something. These situations are all, subject to your own preference at that particular point. In this case, it's an email setup. Goes through the SMTP, and that's fine. And that's how you're getting the alerts. In this particular case, it's even faster. They're not coming through the chart. They're going directly from my web server straight out. And web server here in America and one in Europe, and each one of those will send out. Now, the only problem with that is that you can't filter those. So those who are getting all the alerts, you probably will tend to get them a little bit faster. But even from today's standpoint, what will happen is the alert typically comes in about 7 to 8 seconds before the close of a particular bar, and by the time that actually hits to the email for a server, it looks as though it's 1 minute late, but it's not. It's really only seconds late, and then from there it goes through and just sends them each one. And unfortunately, depending on the individual email addresses, some of them go a little faster, some are a little slower. Some emails hold on to them for minutes. It really varies dramatically, I've noticed, how quickly people get them. And so something I've always suggested too is that, the Gmail ones tend to go pretty quick. If you're getting dot alerts, you can always just set up a Gmail account or a separate one that's just going to receive these. And then it doesn't really become as big a deal. So let's continue our hunt through stocks. PCLN 10-minute. So typically what I'll do is I'll mark these down here. And then we get into the issues where I talk to people about red trend and discount. And that's why it's important when you get your dot alert and it comes through and tells you whether the trend is red or green. I'll give you a prime example of the beauty of green and red trend. Well, there's Amazon. Nice little buy signals from a 5-minute standpoint there. But like here, I pointed these out yesterday. Wonderful 10,000 tick signals for buy. Right as it reaches the target here, boom, we move to green trend, and that becomes a trend following. And then those with the indicators, I suggest if you're interested in moving beyond just the original trade, is where the ABM comes in play, and the fast line moving above. Probably would have had you thinking about exiting right at about here. I typically look for a close below, so at this particular point would have had you out. From an ES standpoint, you can see bears in control right there on the power momentum from a downside move. So very clear from that aspect. Though beautiful trend run. Orange line staying above the cyan right here. Love that when you get a nice consistent orange. Well, now, that's a good question. Bruce has a good one. He's asking about the interval and letting you know. Now, this is where we go back to my programming language, or even better yet, let's go back to the radar alerts. You'll notice that these are all 15-minute on here, and you'll notice it says 15-minute green dot. If that's something that's particularly interesting to you, I can, and by request, do this. It's not something that I thought about doing because, again, I assume that most people would be at it. If we go to our analysis techniques, if you looked at some of the names here, each one of these individually I put as the description. And the reason being is when the dot alert comes out, it will say the name of the stock in that, but I needed to put in front of it for you that it was a 10-minute signal, a 15-minute signal. Otherwise, it would just say Amazon green dot. You wouldn't know what the time frame was. So when I programmed these originally, I actually had to go through and create all of these with those names so that when you got your email, it would appear as something that was, legible to you from that standpoint. In fact, let's go ahead and take a look at what a standard email that comes through looks like. Alright, so for this particular case, I shouldn't do that because we're not looking at the right thing. There we go. Let me pick one that was recent and from our regular mail. Okay, there we go. So in this particular case, I'd have to squeeze it way out here to see the time frame where it comes in. But the general information, as we see it, because of the way I named it. So from here, it's going to give you an apple, and it says 15-minute trend model. All right, well, all this is doing is giving you an information setup saying, all right, from a 15-minute standpoint, the trend has turned red. It's not giving you a buy signal, sell signal, or anything. It's just letting you know that red trend exists, and you want to respect that because it means, one, If you get a buy signal, you're looking for discount. 2, it means you also want to be more cautious with your entry and perhaps trail your entry lower because you have a negative trend. And when you get these in a series, you begin to realize, okay, 10-minute trend turn red, 15 turn red. Oh my goodness, 78 minutes. Now all 3 are in red trend. Now you'll look at right here, 8:59:52 is where that wanted to signal. So within 8 seconds, but it goes out at 9. It's just one of those things. If we look at one that's, this just went out about 5 minutes ago. We squeeze that back in there, 9:15, and the signal came at 9:14:52. So this is a PCLN orange dot buy signal. All right, so that just came in. And then again, it's telling you, and this is what I had to put in the programming. So if I flip back here to my programming, well, I don't even have one of those on there. Let me actually open one of these. Scroll down to where we can get to the actual language. Okay. So here, this shows you what some of the general language looks like. Green dot, number, buy, up target. I had to write all that in. That's all it lets me give you. So from an informational standpoint, I'm limited to what I can write in this line to tell you what to do. It's just going to give you the close. So despite all the variables and the multiples, it won't let me just give you, oh yeah, here's your up target, the ATR times the ATR multiple of that. I wish it would, because that would be so simple, because then you would just get your buy signal, up target, and a stop. That would be the ideal situation. From my standpoint, you have that because I can put it on a chart. And let's squeeze back down to our normal sizing here. And let's start going through a few of the different ones that people want to look at. We'll whip out the dailies. We looked at just a bunch of these individual ones. From a market standpoint, real quick, is anything happening? Well, Amazon is getting a bunch of buy signals. That's a 5-minute chart. Don't show a lot of those, but there's no reason why. If you have indicators, and this is why I throw it out there, because, I tell people, look, it's going to take you a little bit of time to get accustomed to the concepts and that, and being able to see the charts and reading it. But even from a 5-minute, you can see where you've come down, you got overbought, now you're oversold. And it's a clear indication of an oversold setup right there. And still not seeing buyers jump into it real thick. This is where you would be looking right here for this ratio, the relationship between the yellow and the cyan to change. And as that improves, that would become your earliest buy signal, at least from that standpoint. So let's run through a couple of little charts here and get an idea of what's going on in the general market. So if we start off with an Apple Daily. All right, I pointed this one out, and this is what we were looking at the other day. We had very ugly readings. So we got our buy signal back over here. Nice pop to start the year, but then I pointed out we were overbought immediately. So fine, we faded, but now it was becoming very attractive. Everyone's talking about a complete breakdown for Apple here. And then you have the bull side of it where they love Apple, and therefore it must be worth $1 bazillion, and it should go up forever. I don't care. To me, it's just you get a signal, you go from it. Now, this was a positive move yesterday that came in with the halibut signal. What I was talking about yesterday is I wanted to see my stream histogram open up at a higher level. Didn't do that, which means it's still going to have to work out some more. And then we were looking at the positive aspect of this ratio had improved dramatically. Now, it's still not horrible. So the other day, the reading was 13.74 for the yellow and 12.62 for the blue, which meant that we were just a little over 1 point. Well, compared to right here where it was 3.5 points, it was a huge improvement. So we look at today, and now you're within, 0.6. So you can see that the ratio has moved, which just means that shorts are losing the grip on it, and the fact that we had the higher extremes was bullish. So then we say, okay, what is this going on with a weekly standpoint? Now, keep in mind here, red trends. Even with the buy signal, we wanted to discount in this setup, and this is important because I don't see the down move as a bad thing. I say, okay, yeah, I'm getting the discount I wanted. So when we look at this range, it was $10. So I looked for at least a third of that, so that would be $3 from the close. So I'm not even really overly excited about entering until I get down to 522. Now we're at 521. So then you can start to move into the smaller time frames and say, okay, do I have a buy signal there? And we go from there. So let's just flip over here, and there's two ways you can change your time frame. Up at the top of its main menu on TradeStation, you can just click daily net, but if you ever wanted to, you can just go to your format symbol and just select weekly. In this case, it's going to give us 16 years of Apple data. Do you need that much? No. So this is what was very interesting about the Apple from a weekly standpoint. Okay, we all of a sudden started to see some beginning interest right here, but within the very broad short setup. And just this last week, we get another orange dot from a weekly standpoint. And that weekly target right up here is at, if I slide this up, 577. Well, that's exactly, yeah, I mean, this is what we're looking at. From a weekly standpoint, 577 is upside projection from just this orange dot setup. Very similar to what this signal would be here, too, from the halibut. Doesn't have it on here. We can put the ATR on if we wanted to. Let me just do it from over here so you can see. And do I have, yeah, there's ATR right there. So if we look at our weekly ATR when this happened, it was about 40 points. Here it's about the same, 40 points. So simply enough, and this isn't a hard calculation, we can just say 40 in general, and we multiply it times 1.236. So about 50 points, 49.4 is what we'd be looking for from where we're at. Now, weekly standpoint, the range for Apple between the high and the low looks to be about 46, 45 points. So we would look for at least a third discount of those 45 points from the close, which puts us a little bit lower than we were, which is why I was so interested in this 505 to 510 range, and even back when it came in here, because that was looking for my discount, and then for the projection higher. Now, when you're talking about a weekly chart, this is a long way out. I mean, this can, now that it's got an MBI though, your expectation would be 3 to 5 weeks, typically, for your at least move above where this close is, because MBI typically within 5 bars, you've got about an 80% likelihood that you're going to have a higher close. That's not necessarily going to mean your target. That's what the original white candle MBI and the yellow candle GAMs used to give us for projection. We get a little bit tighter when we're looking at our fractal setups here. But when you're looking at this is just to get these signals, a lot of accumulation within an overall setup. And also notice, look at how much higher that extreme histogram has gotten. Now, you're at a tough one because clearly someone's been buying up here, getting close to overbought. And we're at minus 17. That's not the greatest thing, because if you get overbought and you've only moved a tiny amount, that means all those buyers who kept stepping in to buy at this particular level, they haven't been able to move price at all. Now, I don't see it as a big deal because a lot of them will want to accumulate over a period of time here before you get a final move. A little bit on the downside, we see that yellow is overtaken from a short standpoint. However, we are early in the week, midweek right now, so it's not decided from that standpoint. I'm not overly shocked at that, but we will also look at our shakeout indicator. Let me bring this over here. I keep doing it a little bit too much. So we click the shakeout indicator, and that's going to give us another added value. Of course, those lines are from the daily chart. On my ellipse, got to get it to click. It won't give it to me. Oh well, it's not impacting. You can see that we were fairly negative. What were our readings here? We were minus 17 over here, and now we're at minus 11. But you'll notice that we're at the exact same price. All right, so there's been an accumulation within this overall flatness. And that's important to know because it's not the opposite. I mean, if we were right here, we were looking at this cascade lower of the shakeout indicator, no, you wouldn't be interested in wanting to buy this setup, at least from a long standpoint. You'd want to be like saying, okay, if I get any pops intraday, I want to get out. So it becomes very different from a perspective. I point out the weekly charts to our members when it's a significant element, and then move into going back, like I said, to your daily, and then you start to move intraday, and you begin to get an idea, okay, this is generally what the stock is telling me, and it's like I warned everyone back here when we just, started this cascade for Apple. All right, we went red trend back here. Okay, that was at 700. That was a long time ago. And when we went super deep into this shakeout, I warned people, I'm like, do you understand, this is going to take months to resolve because you had so much institutional buying that just ran from the setup. And they ran pretty early. I mean, you started breaking down below my negative 12 right here, which is usually that threshold that says, okay, they're pretty much getting out of their, setups. They've made their money. They're no longer interested in that. And then it really got ugly because some of them were like die-hard holders, and it started just breaking down for them. They were losing too much from the setup. So came back, we got overbought, and we pointed that one out as it happened, and then boom. It just takes a long time to even that out, and even still within the last recent couple of weeks, we were back down in the negative 30s. There just wasn't a whole lot of support, but every time we get to the 0 point, it gets a little overbought. But this is different because now we're at matching lows pretty close here, but look at the difference. So you went from a complete distribution to an acquisition. Most people look at this and they see it as the exact same setup. It's completely different. It's night and day. But that's not going to be reflected in most of your standardized indicators. You're just not going to see that distinction, at least that clearly and that visually, I don't believe. All right, so let's look at some other dailies while we're here. Amazon's got a short signal here, and another good point because, again, gosh, how many times have we been going around this, particularly when it came to like MA and some of these other ones where I point out to people, yes, it's overbought. We can see that from the positive extreme. It's not supposed to be positive. It is. We hit our upside targets, but we weren't seeing any distribution from up-down power. And this is like, if I flip this chart right now to MA, we can see same situation. Even though we were overbought in that, like I warned, you can start with a tiny little position when you get your discount up there around the 513, but we still have the up-down power, nothing but buyers within the setup. Now, we finally have reached our plus 25 on the shakeout, which we see as a pretty close to a sell signal straight up, and not surprising at this particular point, you get a real nice pop from it at that point. Very positive still from the expanded ratio histogram. So you have to wait for that. If you're anxious to short the setup, would I be a buyer into that? No, because your risk to reward just isn't worth it because it clearly is extreme. And then you're going to be relying on the market. Now, the market being generally positive overall with the potential of a light retrace. Well, a light retrace in the market, some of these can just collapse, and particularly when you have things like this, that this is a much lighter volume stock. I mean, gosh, they're only at 500,000 on the day for volume. That's pretty thin, and that can change pretty dramatically from overall standpoint. All right, so looking at Google here from a daily standpoint, again, nice pop, hits the target, completely overbought at that particular setup. And also, this one's got a negative divergence setting up right here. This actually can become a little bit more pronounced for Google. We needed to see this yellow line move above the red on the shakeout, but now you'll notice that shakeout is much lower and you're at a higher high. That's a problem. Okay, and those are the kind of things that you look for and say, okay, I don't want to get married to this setup because it's not good. Doesn't mean I have to run from it. It just means, okay, I'm cognizant. Now I'm going to be looking at my up-down power more closely. And all of a sudden, as I see this relationship change here, where we go from the cyan being above the yellow that you can see now, the yellow, and when that yellow begins to pop up, you can see it means you got distribution. So that distribution becomes something worth paying attention to, particularly now. That's fairly significant on Google, even though you have higher price. Just means that there's still more buyers, but they've reached their point where you've got the big players inside of them selling, and the other people don't see it. And yes, that's when you see those, Mondays or whatever come in and, price gaps down. And you're like, the crooks, how would I have known? The only advantage in this particular case was that Google had eased some of its overbought pretty quick. And I like to see this now. Your ideal situation is this move right here. Green trend, you come down, and we dip below the red line. I was screaming that this was a buy. Of course, it was a buy even before that because we had the orange dot pop in before. And again, if we look at the date on this, you'll notice December 28th. So we're getting these huge buys, and if you start looking at all these charts, for those of you that's first time popping into our live setup, oh my God, how many stocks do we see all had buy signals going in the last few days of the year as they were just being bought up big time with no fiscal cliff deal. There was no deal done, and everyone was like, oh, it's going to be a disaster. No, they went the other way. All right, so speaking of nice uptrends moving, now we can go back here. We got all these buy signals for LVS down at this particular point. I could even put on my ABM, and you would see that it has a stop all the way up here. Actually, if I slide this over, you can see. This is the other thing. If you have the indicators, your data window pretty much gives you all the information that you need to know. Because there's so much, I need to expand our chart. All right, so if I put it up here, you can see it says at the bottom, extreme fractal, and that's the dot where the stop would be. The extreme fractal target, 47, and then it had the catfish, and it says catfish green, because the catfish can come in green trend or red trend. And so that distinction was just to let you know that it was green or red trend in case you didn't have. Now that would show up in the alert. It would say, catfish green, just so you knew that it was a green trend from an alert standpoint. And same target, didn't change the target from that standpoint. And that becomes an initial setup. And then you can see it shot up extraordinarily, coming off extreme oversold. And that's what you get is these polar moves, where you go from an extreme oversold boom to an extreme overbought that begins to ease a little bit. But you have to watch for, and what you're looking for is a negative move on your shakeout. Now in this case, LVS is making this huge run, but you'll notice that shakeout is much lower. So as soon as this turns, it's going to go south very fast for LVS. And now you're beginning to see this on more than just one stock, where their new highs are not necessarily corresponding to the readings, internally at least. It just means that there aren't as many buyers. Doesn't mean the price is going to fall, but it does mean that when you start to get your retrace and you stop seeing the new inflows, that the gravity of just where price is going to pull it down quicker. And I always point out markets do fall 66% faster than they rise. PCLN from its daily. Now PCLN was looking pretty tired to me. Definitely so. In fact, let's put a power momentum on here so we can begin to take a look. Okay, the ratio has been very positive all the way through here. You can definitely see, and let me just disable a couple of these ones real quick so that we can just expand it really close. Alright, so you can see the differential between the yellow underneath as it turned right here at the bottom. Huge buy signals that we got. Oh, let's see what the date. Yeah, coincidence, the 28th, that's well before the fiscal cliff deal. But the ratio has moved down. I mean, it was pretty sizable here, much narrow here. Now, when we look at these two numbers, 17.29 to 17.05. All right, so it's less than 0.25 from a differential. So it's about to roll over, and you can see that we hit our positive extreme, and now it's starting to come back down, alleviated. But do I expect that downside initial target to hit? Yeah. But here's another thing: we went from red trend to green trend. And that's why I have this trend model set up, because it gives us a very definitive understanding that when we go from red to green, we usually have to wait about 5 days for the exuberance to fade. And in this particular case, well, we're at the 5th day. 1, 2, 3, 4, 5. It's pretty easy to count that way. So I was getting a little tired. And that's important, because if you're trading this off dot alerts and you're looking at this, you got to say to yourself, okay, I need to be more careful with thinking about 78-minute charts as opposed to the shorter time frame, 10, 15 minute. And I hope that makes sense. In fact, let's go ahead and take a look at 10-minute chart. You can see it's kind of reflecting a little bit of that weakness. Still in the red trend. 78-minute chart. See, it's giving you that buy range. I'm a little bit more suspicious of that setup. The fact that it's right here at the negative 45, you're not going to get that from a dot alert. Still positive from a trend, but you can see it's about to cross over. As soon as that orange line crosses this cyan, yeah, you have the potential for change from your trend standpoint. And the fact that it got overbought on there and it just started to get weaker. It's not oversold. This is still fairly decent and not completely against it. It's just looking very tired there. If I saw the yellow up there, I definitely would not want to be interested in that 78-minute signal. And if that does happen in the next day or two and I'm still in this 78-minute setup, it just means I'm going to move my stop up. Okay? You just want to be more cautious. You don't have to be afraid of it. You just want to be more intelligent about what you're doing with your overall setups. And this is why it becomes important with the dot alerts to look for in red trend these discounts, taking advantage of them, and not getting so exuberant and excited about setups that you just randomly jump into something because you think you've got a signal or because you think something, shows up as a short. It's like, no, you want to step back from it. And, I'll be honest with you, in my younger days, I used to just want to jump on those things, and this is why I began programming and doing a lot of these things to get away from that initial, oh, let me just jump on whatever I can. ISRG, this was a very interesting one too, because I remember as we were coming up through here, it had hit these and it started to give the gray dots, and it actually began to show some weakness within internals there. Let me put a shakeout on here. I've got my shakeout. It's the expanded ratio histogram I want. This setup right here is actually bearish, and what happened is actually on the open of this day we had this skyrocket above here, and this gets into a more complicated setup. It's called my expanded ratio histogram psi, and it portends much longer downtrends overall. And the way you read this particular setup is, if the orange were above, you would want to be thinking long. If the yellow is above, you are thinking short. So when this happened at the initial, and actually the gray dot showed up at the open here, did I know that it was going to plummet that far? No, but I had a pretty good idea that we were going to be at least retracing, the positive extremes, which meant, at least coming back down into this mid-range, which was right here. But boom, from an intraday standpoint, you can see this happen. Now, this signal is not over, because what you look for is you follow this yellow line until it dips back down to the opposite side, and the short signal is over when the yellow line now reaches this magenta. It hasn't happened yet. So ISRG, from a daily standpoint, still in a downtrend as far as I'm concerned. Some people will see this pop coming up, fine. There's nothing wrong with taking that pop. It actually came up, hit the target. Perfect, fine. Everybody's happy with that setup. Never even got overbought. It's not overbought right now even. But it hasn't completed this short cycle. And this is something we see on the market. And when it happens on the market, we look for anywhere from an 80 to 120 point down move. All right. Now, when it happens to the opposite side, where you have the orange slightly above, now in this case it was a very close setup, just slightly below, and you can see that it barely moved. Here, much bigger differential. Let's see if we can find one where it was the opposite. All right, well, here it actually moved to the exact opposite direction of that setup in this particular case. And this is where it starts to get a little more complicated. You have to start looking deeper into what the overall setups are as we begin to calculate some of the ratio discrepancies. And then we can look at, Did it happen when we were oversold? In this particular case, we moved way below the red line at that spot. And next day, turned red trend, which gave us the opportunity for discounts. And you continue to follow it from those setups. Now let's change this one because this is easy to do here. We can go ahead and look at like a Baidu and some of the other questions that people had. Click it right there. Baidu. Alright, Baidu from a daily. Gave us our gray dot right up there at the peak. Came back down, gave a green dot buy signal. This happens to be a hawk up, and there's the target. 106.81. Where are we at? 103. Halfway there. So still plenty of room for that to go. Not overbought. Let's see, which one's on top here? Dead tie, pretty close to just neutral even, which is probably why we're not getting a dramatic super pop yet. I'd be watching this one to see if it gets, and we look for about inside negative 8 on the differential, so the third one from the bottom. That would let you know that you've gotten to an overbought setup within the indicators. You know, as people ask me, I just talked to a couple people that just signed up for TradeStation. Gosh, they got a decent deal. Not as good as what we were mentioning before Thanksgiving, where they were offering lifetime free platform and free radar screen, which is the one that we were showing for the alerts. But he just signed up yesterday, and he told me he got $500 free trades, and then he has the 60 days of the platform for free. And they also gave him the radar screen for the 60 days too for free. And it's like, and I'm going to give the indicators to him for, they go all the way to the 25th right now for a trial. People who started at the beginning of the year, they have them to the 11th. And he's already begun trading. So he's going to be able to use the indicators, trade effectively from them, which will more than pay for them. But the point is, I know that when typically I give stuff or information to people for free, they don't always act on it. They just kind of absorb it a little bit, and it sort of works. It's usually when you're willing to, actually make an effort with something that you've made a commitment. And it's just human nature, and particularly when it comes to a stock setup. Like StockTwits, for instance, you have this huge community, and a lot of people are just combating, and they're going back and forth. For me, it's always been about the education. I don't need to show this stuff. I have everything here. For me, it's already pretty straightforward. But it's something different, and this isn't what's being presented most of the time for everybody else out there. And so, conceptually, we've changed the way we're looking at the market. We're now looking at it from the standpoint of we understand that computers are running the day. And if you don't understand that the computers have control over the situation, then you're ignoring a huge segment. So what some people say is, well, I don't day trade anymore. Then I move my time frame broader, and I'm looking more at swing trade or buying for longer holds, and that's fine. Nothing wrong with that. I don't object. I'm just saying you don't have to. If you have the right indicators, you can move into smaller time frames. It does give you more of that flexibility. Because when you think about it, it's crazy that I'm giving you 10-minute signals. Who does that? It's pretty aggressive. And particularly, from my standpoint, I'd love to give you even more information from a dot standpoint. It just won't let me. And then I'm going to give you 30 emails when you can look at a chart like this immediately on CAT and say, yeah, I got overbought right about here. Some people wanted to jump into it, from a short standpoint immediately upon entry there when it pops. Well, no, I got rising shakeout, but now I'm at matching shakeout. Well, this is where the high was when we peaked out right here. Look at the high now, way up there. So I don't have as many people, but my up-down power is telling me, oh, these guys are selling into this setup. So that ratio started to decline right here, and now they're selling into this setup. Okay, some people are going to think, oh, well, it's just like the market. It's pretty even. Well, Mm, this one's a bit more overbought than that because we're way over those signals. And we expected this to resolve to the downside because the yellow right here is below. And what this means from a practical standpoint, imagine you're looking at, 4 to 6 million different trades. You're looking for a footprint of very specific buying and selling at specific spots in a pattern. And it's so fractional and tiny that the numbers that I come up with, I mean, these are multiplied by 1,000 just to get to these negative numbers and almost to zero. And when you look at my extreme histogram here, and it's reading at, negative 45 in that, you can see that I've already multiplied by 1,000 plus in order just to get it to be at a negative number. And this was never supposed to go positive. So when it goes positive, you have this exuberance. Well, again, I've talked to you about this. We go from red trend, and let's minimize these so that we get a clearer idea of what we're looking at. When we go from our red trend to green trend, I want to be looking at about 5 days. That's about how long it takes before people get, worn out of, the excitement of it. So 1, 2, 3, 4, and 5 on CAT, and lo and behold, boom, we start seeing more active selling taking place within that configuration. So no real shock from what's going on right there at that particular spot. Hopefully that answers what you were thinking about there. Netflix from a daily, let's look at that one too. And then what I got, Baidu that you want to look at, fine. Oh, we just did the Baidu. Netflix and FLX. And any other, I had made an SHLD before. I want to get to that one. FSLR, sure, we can do that one. Alright, so here's Netflix from its daily standpoint. Now, it went counter to this, and this is something I talked about. Look at this. Alright, we had just seen this nice move, cut the buy signals. Red dot short came before we got our fulfillment on the buy signals. You got to wait for the buy signal in green trend to finish. Now, in this particular case, ratio changed, and boom, we went to beautiful setup here with this rising histogram, but kind of peaked out as we went positive. Right there, the differential, the third one from the bottom, is at plus 6. So we went a little extreme with that. So then we can go ahead and take a look at our shakeout. I'll put those back on. Expanded ratio histogram. And this is where, it comes into your preference in seeing, do you prefer to have the actual number as opposed to a dot, or would you rather see the dot? Or I can eliminate the up target and just put the value for the up target and have it say up target. I think I wrote that, well, that one was a different one. But right here, I just have it say up dot target, and then it gives the price tag for that, so that at least you have the visual. I want to do what's convenient for most of you. I don't need it from my standpoint, and I don't think that those with the indicators will need it, because we can just go click over it and see the total right there. Down at the bottom, target was 94.82. Now in this particular case, we expected the short target to be reached. It's just a matter of waiting for the best entry. And that entry came right about here. This was the first decline. You had your yellow move above the red line on the shakeout right here. And then you had a lower shakeout reading from 16 down to 14. So that put the entry right in about there at 95, 98 range. And particularly if you were looking for a discount at that particular point, you might have been able to take advantage of a little bit more. I'm still expecting from a market standpoint a little bit more of a retrace, and so we haven't jumped into any new longs. It's a little frustrating because, you want to be able to go ahead and make immediate trades. So what we did was, on our long positions, like we own CAT, we went and sold the 26 calls. I forgot to look at CAT price where it was when we were last on there. Let me see, do I have it here, bottom? No. Let me go back to it, because that's a good point, because it's going to close at the end of this week. So let me go back and see how that's doing. Now, a lot of times within our regular setup, oh wait, no, it wasn't CAT, I was thinking of X. I confused myself, it was X that I was talking about. 25.30. Okay, so we're fine. We sold the 26 for Friday for this week. And what's good about that is we can take stocks that we own, and if I have a particular negative market bias, then we would be buying an in-the-money put and utilizing then owning the stock at a lower level by selling a put to acquire the stock, and or if we own the stock, we sell calls, and or we sell ratio spreads within those as weekly opportunities to collect a paycheck. You know, you get these people who talk about dividend stocks and everything. It's like, well, that's fine. We played plenty of that with the JPM and that, but within that, we also played our weekly options to collect, you know, weekly premium. And it provides a tremendous amount of return doing it that way. What was the target on the cat short? Let me go back to it real quick so that you have it from that setup. CAT. This overall down move 91.26 is what that target was for initial. Theoretically, you could see the 87 getting hit, but you don't have a positive extreme there on this initial short setup when it gapped up there. This was your first positive extreme. So the number one area you looked for is the low to be retested on this positive extreme. And then from there, you look for your overall low setup. And that's, like I said, I don't know, did I look at the retrace on that one? Let's look at it real quick. So, weren't positive extreme there. We got to positive extreme right here. So, 90.69 is that particular target, but the overall red dot short, 88.52. And sometimes, you know, you'll get 5 bars of these red dots that will go against it. It's usually right about that time you start to look for that shift over. If you had already a, you know, higher shakeout that started to fade, it becomes a little easier to jump on it faster. I mean, you can see the same thing happen here. 1, 2, 3, 4, 5th day started to roll over. I mean, you see the pattern. It repeats itself. And then at the bottoms, you get your green dot buyers buy it up at the bottom. And they do this over and over. So, hi, Sherry's jumped in. We did go over Apple. We were talking about the positive weekly sign. We were looking for a little bit more of an improvement intraday, but looks good from a longer standpoint. I mean, particularly, even now you're looking at it, you just jump back to it, you see higher extreme, higher shakeout, matching lows. Love those setups. What you're just not seeing is you're just not seeing a new commitment of buyers that have either acquired enough shares that they want to pop it. We do have our new buy signal, and I'll just mark where that up target is. For this latest one, it's at 540.68 from an upside. So that's good to have. Let's run through a couple of other ones. We talked about Google from its daily standpoint. Squared away there. Wanted to look at eBay. I like looking at swing trades from a 78-minute standpoint. Particularly if you have the indicators, it really looks. eBay. Let me just do that, and we can look at those again because, like the 78-minute standpoint, I think we just had a signal. We had the PCLN signal, but we also had an Apple 78 signal. There's the 15-minute. So you can see we went from over, bought right here after we got all of our buy signals this morning, came back down. We've reached oversold. This is a very bullish setup right here, going into the latter part of overall. Nothing from an Apple from a buy standpoint on a 78-minute has been kind of a dud for a week so far. And that's going to happen. There's nothing you can do about that. You just have to wait for those particular signals. And if you're not going to get a longer time frame, you play the shorter time frames. In this particular case, 15-minute. We can even flip it to a 10-minute. I'm sure we're probably getting a 10-minute signal within that. This is why on the dot alerts, I always suggest to people, some people just want to trade a 10-minute time frame. And it's like, okay, that's fine, but you're going to miss out a lot of what's happening above you. And if you're not cognizant of what's happening on the higher time frame, you can really get beat up. We'll put up IBM in a second. All right, See, so the 10-minute did catch that oversold setup in the orange, and it would have looked for a discount. So again, we would take the discount. In this particular case, you're looking at a 10-minute chart. We're only looking at $1 there, so you'd only be looking for about 30 cents. So somewhere around 520.60 range. Went down to 520.22, and already a pretty decent move coming back up there. Just kind of flat to overall nothingness from Apple in general right now. Nothing you can do about that. Is what it is. eBay, from that daily standpoint, let me squeeze this chart in a little bit and get some perspective. So it's exploded. Nice up down power view. Let me get back on some of these. Power momentum is going to tell us, yeah, they're still applying into the situation from an upside. And so there are a lot of people that just because it popped up here wanted to short, and it's like, okay, but you got to have a practical reason. I mean, are you seeing any weakness in the number of buyers within that setup? And you're not seeing that from your power momentum, at least at that particular point. Then I would want to go to my shakeout and say, okay, is the shakeout giving me anything? I don't want that. I want to add my shakeout. Shakeout put in a little bit of weakness, and you just had gotten your crossover, and this is good now. I actually will be looking for this ratio to change a little bit, because I think a short there from an eBay standpoint is not going to be horrible when it comes. The problem you've got is that we went from red trend to green trend, so you at least got to wait your 5 days. Your 5th day was just yesterday, and now you have kind of just this neutral buoyancy. So, but here's the other thing. The toughest part for a lot of people is doing nothing, not making a trade, because there's no signal. It's like there's no signal here that says short. There's no signal that says, okay, now it's time to buy long. In fact, you're just now easing a little bit of the overbought, and that may take another couple of days before it's finalized. And like I said, I'm expecting a little bit more of a market pullback before we finally get finalized. So I'm not anxious to jump into anything. I mean, I jumped into everything hard and was very aggressive at the end of the year when everyone was selling. That was the time to be aggressive. And some people say, well, that was too scary. It wasn't scary if you're looking at what we were looking at, which was just hordes of buy signals. Even IBM had nice buy signals going into the end of the year. That was the 27th of December, height of fiscal cliff nightmare, and I got orange dot buyers. Prior to that, I had a bunch of green dot buyers, all wanting to jump into the setup. And then, now in this particular case, trend is still red, and we get the pop, meets those targets, but I get a new signal. Am I buying that signal right away? No, I've got to be looking for a discount. But there's also the concept of when you're looking for your discount, you don't just buy it because it reached the discount. What I'll typically do is I put my buy entry in when it reaches the discount at my original close, and then I want to trail it lower. Particularly if I'm not anxious, if I'm a patient trader, that's what you want to do, and then you keep following it. Now, if I get past my 6 bars, I know I've got a problem. I mean, in this particular case, I knew I was pretty close to overbought as soon as it happened. IBM shoots up here, the differential gets inside 18, and you move to a green trend. And unfortunately, this is an interesting anomaly you'll find when we go from red trend to green trend after there's been a big move. Usually the green trend, the first 2 days of it are usually flat to lower, and that often provide a very nice entry for an upside tick. But in this particular case with IBM, not a whole lot of interest in there. In fact, the ratios on the power momentum shifted quite dramatically and very quickly once the pop-up came after, and this is what happens. These guys will take their position, shoots up, hits their target, they take their money, and they move on. Or they wait for, a little bit of gravity to come in and start over again. They're not in a rush. Look, there's no coincidence that all these dots are appearing at the bottoms of IBM. Why is that? Because they're buying at the right spots. This is just the nature of the beast. And are they creating these waves? Yeah, in a large sense they are. When was good when we talked about this one briefly, right before actually I began the report, because we had our buy signals, the green dots right here, you can see them. Now, it's a little easier to read when I don't have the expanded histogram on here, but what we're looking at is all the way back here on the 27th, more buy signals for Win, just like every other stock was giving us buy signals. I was just reading the quote there while I was talking about that. About earnings. I don't care about earnings per se, in the sense that I don't really follow any news because it's all hype. These guys are going to show me if there's serious buying, they're going to be buying before an earnings. In a lot of cases, you don't get dots. On some cases, before earnings. It's interesting, you just don't. What that tells me is that there's no real active interest from those particular fractal buyers. In some cases, you'll get it, and they'll be doing it before that run-up begins. Some people say, oh, it's automatic run-up before earnings. Well, no, not always. Just doesn't always happen that way. So in Win's particular case, this was an interesting topic, and I was going over it with one of the girls. We had this buy signal. Win came up. We were looking even after the bounce. Target up here was all the way up to 121.48. Came up, hit that target, and so then they were, saying, okay, well, can I short? Well, I'm not getting a short signal because you can look at my up-down power. We've not seen a setup there, but we have positive extremes. So my expectation is, yes, these will retrace when we get some weakness. What are those levels? Well, we start with the most recent one that just came. The differential reads positive 7.6. So I'm looking for that 119.40. Next one, I'm looking for 118.34. And then all the way down here at 115.88 will be what the expectation is when we start to get a retrace signal. Now, Win's getting pretty much up there. I mean, it hasn't seen this kind of overbought in quite some time. It's actually over the warning line. We haven't seen it get over the warning line on any of these other previous pops. We'd have to go back, over here when it last had the warning sign. And you can see these red dot shorts came in a little early. You didn't get the ratio change until just right about here when the shakeout went over the top right there of the warning line, and then boom, started to cascade. It was a very short-lived retrace, but did come back down to where? Well, came back down to this short second one. Didn't hit that first one, but anytime you're getting a short signal directly after getting a long signal, this isn't a short because you hadn't even reached the target. You got to reach your target first, particularly in green trend. If we were in red trend, it would be just the opposite. And, Bank of America, of course, we use fractals for the Bank of America. You got to remember, the fractals were originally designed for all the major indexes. This is what I originally created everything, because I trade the ES, futures and things like that with it. And so the concept was, okay, based on the liquidities that we're seeing there, and then the obvious question, once we had identified these particular setups as they reoccurred, okay, well, let's look and see, do they do the same things as it relates to sectors? I checked that. Oh, lo and behold, sure. Then you begin to look at it and say, okay, to start to work with stocks. Now, I haven't even gone through and optimized it fully for stocks. Some of our members have started to do that, and I even created my Opus program to work for stocks. And we're finding that even using the daily setup works for intraday, which go figure that. In fact, I think we have that on, it's not this one, it's 10,000 tick. Let me see if the strategy is active on it. Yeah, it's active on here. When's the last trade? Well, we made these trades right here. This one's very selective in where it picks its entries and exits. You can see that it's made quite a few entries right there. Again, right over there. And it's not necessarily going off the dot setups. In this case, it did go off a dot right there. That was the last trade. When we saw these the other day that were very attractive setups. Now, we look at our performance report. It can tell us what this is doing from an actual standpoint. Okay, so when this thing decides to make a trade, it's very effective. It's making an 80% win rate on that trade. Great. Profit factor, 3 times our losses. All right, we look at a performance graph. Is that equity curve fairly consistent? Yeah. In fact, pretty close to near highs on that equity curve. Geez, how long? Well, I mean, it's been well over a decade from a compilation standpoint. When the MBI and GAM came through, I only started putting those out there for people once the financial collapse, because I had so many friends asking me for, help because they were having such a hard time as 2007 and 8, and so I started doing a newsletter at that point to, assist people, and then it, expanded, and I had been creating a lot of these, and it wasn't until I got hooked up onto the straight trade station and my ability to write the individual code in a way that I didn't have to actually do the math and then just go ahead and trade. I mean, allowing to be able to put it on and be automated became a huge advantage. And then again, even I didn't convert them into dots until I got onto StockTwits, because it was like, well, I didn't need them from dots. And then when I began putting the charts, it was hard for people to see what I was pointing out. And, literally created the dots in the form of just showing them to you. That was just a matter of programming it so that you could see them. And this is where we're at, and that's why I keep refining it, because it's more for what you need as far as a visual, having the dot number and then putting the target up there. Then we get into the advanced stuff where we can start talking about the nuances of individual setups, how they work, what you're looking for in particular as it relates to, these particular. Let me take care of this one here. All right, so we can look at B of A in this particular case, and this points out what I was talking about with the positive extremes. All right, so you have some serious exuberance, but we changed from red trend to green trend. So we don't worry about this one. It's the second set that becomes more interesting to me once I've passed my 5-period move. You can see that plenty of money flowing in there. A little bit of weakness started to fade. You went into a little mini sell signal, and then boom, took off again. Kind of what we're seeing in the market in general right now. And pretty much we hit this secondary wave here, got well into that above 25. And that's just, you're just going to have to wait your time when it sits here and does that. It's coming lower because you've already passed this plus 25 level of the shakeout. And it's just, okay, it may take a few days. Some people, that drives them nuts that they have to wait for it. But gosh, we would expect it to come all the way down to the low on this one, 1130, and then we can go back over here, 1127, and then 1105. So those become the significant targets. Oh, right now the people that have my indicators right now, they see all of this and a whole lot more, because we have a whole lot more that we can be putting on here that I'm not even showing. Not to mention from a daily standpoint, like when I go through on that review, everything you see that I do on like the nightly reports and that, exact same that you're going to have. But you're also going to have all these futures setups. In fact, if I go to this one, we can see that this is the MBI Opus program. And it was interesting because you can see these losses that were set up. In fact, let me just clean it up so it's easy to see. Got a lot of information on there. We don't need it right now to look at what we want to look at. And that's just a matter of right-click disable. Now, just because I disabled them, all I can do is just go right back and I can just click them again and they'll come right back on. So, from that standpoint. Now, it was interesting. From our daily standpoint, when we were trading this, we got the signals, but we could also see that there was weakness within the setup, so we were buying these at discounts. So as the discounts came down, we bought into these setups, whereas my program was actually taking a loss on the setups. We had just gotten in down here on them. So that's why we're currently still long our SSO setups overall. Now, it did give additional buy signals even up here. But I wanted a bit more of a discount because, unfortunately, I like to get cheaper. And because, look at this, we're seeing that in the power momentum that there's still some weakness. The computer program doesn't care. What is the computer program doing from a performance standpoint? Well, that's fair enough. Let's take a look. This is what it's done since 2003. And that's what you're looking at from a general win rate. We can look at our periodic returns. So far started this year at a slight loss, but every year previous to that, you can see what the end result has been and how it's been doing. So that's pretty clear. But what I begin to look at is my RINA index the equivalent of what my equity drawdowns are. And in those particular cases, I look right here, your largest consecutive profit versus losses. All right, and that's where you begin to gauge how everything is as far as its relation to one another. And so when I even look at some of the intraday systems, those become important factors. In fact, I think this is the Russell. I haven't done an optimization for the Russell because I'm just too busy doing other things. Let's even see what the Russell's doing. So this will be news to me. All right, so a lot weaker. That's only in the 65% range through 2004. And that's in between, and that's because this one, and like the NQ for the NASDAQ, you need to go through the settings, because when we look at our futures setup and we think about formatting a particular strategy, we go to format, and these are all the different inputs that can be adjusted going throughout. And this is why they're on the website. And you can go through and you can select which ones you want. From my standpoint, when it comes to trading, well, you got two different things. I have the automated systems that trade for me in a variety of accounts. Those I keep on a server that's 24 hours, so you don't have to monitor it as much. I'm not worried about your typing. Yeah, the strategies, they're not taking into account the dot setups per se. They're taking into account much more complicated overall setups. Doesn't mean you can't still play the dots from your own version. And for those that have the actual indicators, they actually receive a couple of unique ones. In fact, I can point those out because they get a lot of my variation programs. Oops, didn't mean to get you that one there. Just trying to find my page that I need, and for some reason this is like super huge. There we go. Let me get the right way. Alright, so for instance, members, when they're looking at it, they're getting even these orange dot strategies, some of these experimental ones that I do, the daily trend trade, and those, I think I've given that to people who are trying them out as well. And what some of those do is they let you play with different option setups within the strategies, and you can do optimizations, and particularly if you're wanting to move towards a particular stock or something. Well, I trade off the dots, but I also trade off of the additional programs. For instance, like we were just showing on that 1,000-tick chart. Let me put it back up here. I gave this to everybody, and we took advantage of these trades. I mean, I literally traded that live. In fact, last night I was getting ready to do the report, and I had the 15-minute ES chart because I was putting the values in, and all of a sudden I got a short signal. And it was like, I just quickly whipped in there. I mean, it was a tiny 5-contract trade, and it was looking for about 2.5 points, and it was boom. Within 2 minutes, it hit the full contracts on the way down, and before I had even, finished inputting the information for the chart in general, it had already, done that. Now, if we kind of zoom in, this is my ABM. Let me put up this chart real quick right here. Okay, well, this is the actual ES setup, and we got a little signal right there. So, I mean, if we wanted to, we just go around here and say, okay, based on that 10,000 tick, we had 2 buy signals. We're a little late into the setup. Order filled. And that's what happens. Yeah, I know, my fault. That's why the report was out late. I was there playing around trading. So, I'll do that from time to time. Now, what's neat about TradeStation in this particular case, and we can go through and scroll to see it, because I've attached my OSO order, it's automatically put a stop down below, and a profit target up above. All right, so what I can do is we can go over to our dot here and say, okay, what's the target? Well, it says a target up is 1457.43. Well, that's not practical from an ES standpoint because we need to have an even. So I could say 1457.50. So that would be right there. And we can just do that. And so that's in place. All right, and then from a downside, 1450.89, so it would be 1450.75 be the closest one. All right, so there you have the stop in place and the up target. Do I have to do anything else? No. We need to minimize it and move on. I'm sorry, should I not say 5 contracts is tiny? You know, the range, you know, can be 1 contract is fine to 100. It's all relative, right? Signal's a signal. I mean, you're not going to move the market either way with either of those, even if you get to, and, you know, it starts to make an impact once you get over a couple hundred. You can actually see a little bit of a gyration, but if you're, you know, not doing it all at one time, not usually a problem, you know, because what I'll do sometimes, like particularly in a case like this, if we had been down here and got the signal and then I get the second one, I would have looked for an additional one there. We probably would have added, you know, 10, 15, just for sake of argument. But moving on, we can look at a couple of the other, well, let's look at Facebook while we're here. Oh, that would be great. Actually, water would be perfect. Let's flip this to Facebook. Now, some people say to me, oh, do I care where the market is at any particular point on that? No, because these fractal buyers, they're not really, they don't care what you think of as support and resistance lines. It doesn't matter to them. They've acquired a certain amount at an average weighted price, and they're just looking for that to be, meet its target. When it meets its target, fine, they don't care. It's like, some people think, oh, let me go through my Apple valuations and determine what that is, and that's fine. From an aggregate standpoint, sure. All prices to stocks have some inherent calculation that, you know, created everyone's perception of their value. Within that, you have your traders that are going to trade these ranges up and down, and this is where my expanded ratio histogram comes in because it effectively teaches you the difference between where everything's moving along steadily, and then all of a sudden you've gone off the highway onto a different route. So instead of on Highway 1, now you're on Highway 5. And that's the difference. And most people can't get that paradigm shift because your stochastics, your RSI, they're not going to show that. And 2, yesterday I was a little late with the report because I had to go and get my template for my crown from that tooth I cracked. So, unfortunately, I'm going to be ready in another week or 2. All right, so here's Facebook. We were hyper excited. Facebook, geez, had been putting in all these orange dot fractals along the setup as it was retracing. Completely came back down to almost a near zero. 2771 was the initial target. She ended up a little bit higher from the most recent setup. And just now, I would say you've reached a point where you're kind of gotten into that overbought. But again, how many charts do we have to put that we're seeing the exact same thing for the power of a minute? So you're seeing this money just flowing in to the overall setup. Nothing you can do about that. It just is what it is. If you're writing it long, there's nothing to worry about because we just go and we connect to ABM, and right now that has a stop at 27.97. You know, and typically what I'll do is when a target like this particular comes in, that's where I set my stop going forward. And then once the ABM catches up to it, I'll ride up from there unless I've got some kind of turnaround. But in this case, I'm seeing a beautiful rise in my shakeout. There's no dip. There's nothing to be concerned about from that standpoint. So you just sort of leave it. You don't have to do anything with it, which is hard for some people because they just want to constantly trade. And I think of that as more gambling than anything. If you're really trying to overwork it, there's just no need for it. I know Z-Man put on a question about time frame discrepancies. Let's go ahead and look at some of those. Will happen from time to time. Some kind of correction. When you get that little C there on TradeStation, it just means that there's some kind of data error. I always like to just go ahead and reconnect it for that window because it's usually nothing, but I always like to know. Alright, so 10-minute signal still. Remember we had them from back here, a little bit of a discount, and it's pretty much flat from that. And we can see why, because we've had the shorts really trying to add into that setup. Now, what I look at when I see that is, and we're coming down on this histogram, as soon as we turn around on that, it's going to be a nice bounce from that overall setup. So, there's some potential for that in that particular setup that he was talking about. Let me go back up to the thread here. Google, 10 dots. Let's put Google's chart up here. Google was up at the top. That was PCLN. Starting to pop. Alright, here's a Google 15-minute. Oh, look at all those buy signals. That's nice. Alright, so if I just move these up dot signals, you can look at this. Green, green, and then you have the ducks in a row, which are all of them. They're all looking for 734, 735 range. Well, 10-minute represents 10-minute. The 10,000 tick chart that I was showing, that's a little bit different. There's no time associated with these signals here. This is all about the actual contracts traded, and the data is integral to the fact that there's no real time to this. So one bar to the next, you have no way of knowing. I mean, this particular case could be hours, could be minutes when we look at it from here. In this case, it was, 16 minutes, 17 minutes? The 78-minute is 5 equal bars in a day. If you do a 60-minute chart, you're going to have a half bar. And so that's what the 78-minute is about. It breaks the day into equal components. And why is that necessary? Well, it's pertinent, particularly if you want to hold on to a trend trade or something like that. You can look at a 60-minute trade. There's nothing wrong with looking at a 60-minute trade. We can go ahead and change this. Easy enough to do so, too. You can just right-click, format your symbol. And this HD camera is running pretty heavy. We just type in the word 60. I can do 58. What's the practicality of that? None. At least with 78-minute, it represents 5 equal bars from a date standpoint. Here's what your 60-minute chart looked like. A little bit lower target on the overall buy, 737.47. What was the high today? 738.17. Okay, so that's the only difference. It's just going to end with a half bar. It's not really a reading. So that's the only reason we choose 78 minutes, so that we get equal bars throughout an entire day. Extra 18 minutes. You can debate over and over what time frame is most popular for traders, but each of these guys has a different aspect. In this particular case, we were talking about trend. Google went from red to green trend right here. We talked about this bar right here when it was lower, when it was down here, and I was saying, so we were saying, oh, we can't get past the 730 whatever resistance. And I was like, well, the expectation based on what we were seeing from our general reading was that we were looking at weakness, but that today we would come close to that target. We came pretty darn near it. 738.40. What was the upside? 738.17. I missed it by pennies. Pennies. So let me flip this one to a 15-minute. We'll look at a 10-15 minute combo of Google side by side. I think the other chart was a 15-minute. Yeah, so now we'll have a 15, 10-minute, and we'll be able to compare what happens within those two, because it does give you a little bit of extra bonus information, so to speak. 10 minutes is going to give you your early signal. I could have done 5-minute, but you know what happens with the dot setups on there? You need to have more information. Oh, I over-clicked that. That was no good. Shame on me for doing that. Clicked the wrong button and made it unhappy. 734.59 is the upside target, and then where are we at here? 733.36. There's got a little ways to go. No issue with that. But now, let me expand this out like so. Slide this chart over to here. We'll take a look at the 10-minute right next to it. Alright, so can we see all that? Let's squeeze this 10-minute chart a little bit more so that we get more data into it. Use some of our old lines. Okay, well, we got all these different dot setups here. So let's put in the same information. We want to have power mo. Okay. Alright, so now we're reading the exact same configuration. Both from power mo, you can see from the 10-minute, 15-minute didn't quite show the weakness until a little bit later. These last two 10-minute bars are showing what we're seeing on this final 15-minute setup. But going into the down move, I want to put my expanded ratio histogram because for me, it's so much easier to have the extreme histogram overpriced because it really just clearly shows our overbought, oversold from my standpoint, at least. And it's critical that you have that read as a no axis in your scaling. So if I put this in there right now, it's not going to show correctly. I need to have my no axis on here in subgraph 1 because I want it to float within price. Where'd my extreme go? If you can get on there. Okay, so here we can see both 10-minute and 15-minute expressing extreme oversold within this setup, which is fine. No objection to that whatsoever. What you're going to find is the 10-minute will reach an overbought prior to the 15-minute when you're looking at it from a actual trader standpoint. Coupled with the fact that you're also going to get your short signal a little bit earlier with your 10-minute, and if we had a 5-minute here, it would be even clearer with the setup. But you can see that the 15-minute never went red trend. And so the question about the red trend, well, it just provides an advantage here because when you get the dot signal in the red trend, you could look for additional lower price tag. But from this 10-minute, it's been a little general cascade lower throughout, even from the 15-minute. This doesn't hit any of those stops. And this is why I typically suggest breaking your trades into 3 components at least. It just gives you the broadest range to look for your best configurations in the dots. Now, you can see that the dot came in here. If you were trading this live and looking at this dot coming in here, would I play it? Probably would wait because the extreme histogram is in no man's land. Okay, the reading at -8 is just at overbought. All right, so would I be excited about that setup? No. But am I excited about a setup where we dip into oversold? Yeah. So, does that mean that we shouldn't have an orange dot at this particular case? No, but it just becomes an advantage to being able to be more of effective if you're day trading. You have the indicators. You want to know that this configuration is taking place because it's showing you that yes, in fact, these guys have bought, but they're not afraid to let price move down lower, and oftentimes it will become their second set because you don't know how many times they want to buy within the overall setup. You see the footprint, but you don't know that what their total, aggregate that they want. You only know that they've reached traditionally what an aggregate has been at this particular point, and then all of a sudden, they've added more. So you can see that orange dot, whoever that person or group is active in Google at this particular time frame, in this particular range. All right, the fact that you've jumped in with some additional people is helpful to them. But, you just don't know how many times they want to reproduce the setup. So, just a little variation. I'm not usually a buyer, and this is why I'm not a buyer right now in the market. Even though we've had this little move down, we went ahead and sold calls on our SSO position because we're right in this no man's land with the extreme histogram. I wanted to move down to where I've got a positive expectancy either that I've reached oversold, in which case it's either going to just cascade lower really fast, or I've reached my point where it's oversold and now we've turned around and I want to be a buyer. So this kind of hanging in the middle of nowhere land, that doesn't work for me. But let's take a look at it from a 5-minute standpoint. Why not? Because oftentimes what you'll see me do for my tick charts for trading the ES, I'll have a 1,000 tick, 5,500, and then actually I even have a 3,500, then I go to 55. And then people ask me, well, why do you choose the odd number? I like to have variations in the range, simply because then you're not just picking an even one. And so the whole point is I'm not looking to just have monotone readings. I want all my charts at different time ranges, simply because the dot fractals don't rely on that time, and it's important to be able to see that differential between the two. So you can see 5-minute time frame got oversold a little bit quicker and really accurate from that buy setup as far as this most recent dip, and nailed it pretty clear right there. We'd have to squeeze that chart quite a bit more. There we go. So here you can see oversold, but it shoots to overbought. Kind of interesting in this spot where you ended up with these setups, but clearly shorts were an advantage at that point. Now this is where I like, because when you see that histogram move to near negative, there's really nowhere left for them to go on this power momentum, and at that particular point usually you look for a pop. So weekly credit spreads. You see, I think what happens is when you start to actually have the indicators, you stop taking that type of approach because you don't really need to. What really becomes more effective is literally getting to an overbought situation, buying a longer term in the money put, and then buying the stock for your signals in between. Becomes a different version of creating a credit spread, because you have the upside put on the upside to protect you if you make a mistake or do something wrong. You have that protection. But if you're looking for more swing trades from a weekly standpoint, I think you need to be looking at least 30-minute to 78-minute from an overall. But now, what I suggest to people is, particularly if you've got an overbought situation, a lot of times you can sell the portion of it and then buy the other thing. That depends, too, on your ability. Some people can't do naked calls, puts. I've always found naked puts very effective as a purchasing tool for stocks, particularly when we like, because you're getting a premium, and oftentimes stock is not quite at where you want it, and so by selling a put at a particular strike gives you what you're looking for. And if it doesn't quite hit there, well, fine, then at least you've collected some premium. We've done that for most of our portfolio positions within the overall setup. So you can see that started getting close to overbought right here from a 5-minute standpoint, a little bit easing. But we went from red trend to green trend, so I expect a little bit of pullback, but I would expect now that this will turn around and should beat the upside targets then for the 15-minute range. Not looking bad. I would like to have my expanded ratio histogram is already on there. I need my shakeout. Put the shakeout on that 5-minute. So they're both on top of each other, so I'm going to pick some graph for one of them to be lower. There we go. And you can see for me in a call, this is why I have multiple 60-inch plasmas, because I will usually have about 3 or 4 of the indicators. This is about all you really need. When I use my price oscillator and some of the other ones, those are on daily charts, and I keep that separate. And that's kind of why I go through those from an overall aspect. And I'll usually check my daily chart beforehand, and I'll jot down any particular levels that are significant as far as what we're looking at from a fractal standpoint. Particularly, I look for levels where I've dipped below the red line. Some people say, well, isn't that always lows? No, not always, because look, you dipped down below the red line here. It was a warning that you were going to retrace those lows, so even when you got that next signal in green trend on a 5-minute, hey, you got to pay attention to that. Interesting, though, because even back over here, when we dipped on this one, the yellow was above. The yellow below here, those all suggest resolves to the lower. Now, we dipped down in this one. This suggests resolve to the upside for the target. So, much more bullish from that particular setup. Just interesting when you look at it from those shorter time frames. We also converted, well, we'll guess it was right about here, so 1325. So it was 10 or 15 minutes ago where it finally resolved to the positive side for bulls. And yeah, there you go, you get the halibut. Now see, this is the whole point of the halibut, comes higher than a catfish. It just swims a little bit above, you know, your typical happenings. What would be happening with Apple? Should I go and run and look? Should we go find out what's going on with Apple? Is it still red? Hadn't even taken a shot at it. Let's shrink this back down so we can get a little bit tighter view. Go back to a normal chart size. Alright, let me put up the Apple, see what's going on. Google for its daily. Let's get rid of some of these. Okay, there's an Apple. Oh, yeah, well, that's why. Didn't even know it. You see, we were talking during the time, and lo and behold, we got a orange dot buy signal for Apple on the last 78-minute bar. Well, you guys are the first to see it. All right, but this was our Apple 10-minute. We had talked about these already, so nothing's happening. It's right in line with what we expected. And there's the target overall. All right, well, here's where you get into the colors of the dots. Okay, the colors, I don't know what I'm going to explain to you. They just represent different footprints, so to speak. So, you know, whether you find a seashell that's brown, a seashell that's green, is it still a seashell? Yes. All right, so fine. These are just distinct groupings of data fractals that appear. So the significance to them being is, okay, if you have a short one, which would be the color dot above and a number, though I replaced the number just recently when I started putting in those values. Let's see if we got a 10-minute short. Well, here's a short right here. So the shorts are your dot above and the gray. And then you have your color dots down below. So I gave them the fun names. And yes, you can go to the website. In fact, let's go ahead and do that. Let me shrink the size of the page to, I think 50% should show it. Alright, shrunk it down, so that should give us. Alright, so, well, you're going to find it in the member content. For those that are on the trial, you'll find it right here where it says dot glossary. Okay, goes through, tells you what the different names are. Or you can go to the portfolio page in portfolio and hedge positions, and in the spotlight section also has glossary of terms. And so it goes orange dot, bifractal, cyan, and you can go through there, and then it gives the bearish signals as these. And it talks about like the gray dot being, you know, specifically you're looking for an immediate retrace to the lows, and then from there you're looking at the red dot, which actually has the specific ATR. And, you know, I kept it simple here at 1.2 times the ATR. It's actually 1.236 if you really want to be getting specific on there. So that just gives you an idea, and that's the easiest way to find it on the website. You know, and I've talked about moving. Put that back up for a second. Did I just close that page accidentally? Oh, there we go. Okay. Going back to the main page for the Opus strategies and performance reports. You would find them right here in the MBA strategies Opus reports right here. These are the individual setups. And let me enlarge this from 50%. Let's go 75. There we go. It makes it a little bit easier to see. These are the individual 23, 4, 5 setups that make up my MBI Opus program, and each of them you can download the file and it will give you the specific performance report of each of those. And then we've had some members do some additional work, like for instance here's the Apple work that was done from a performance report, and he pretty much, gave this for everyone to look at. It gives all the different settings. Okay, so this one tells you you've got a 12.93 profit factor, 95% win rate, and with this you can go through, and at the very bottom of it, it gives you all of our settings. And so you just would have to go through and input these setups that have been created through all of it, and it will produce the same daily setup. Now this chart is based off of a $100,000 portfolio, blah, 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 blah. But all those adjustments can be made specific to yours, and this is off of 1,000 shares, I believe. And typically allows up to 2 entries. So that's what you would get from that particular setup. Well, we already have auto setups. Within our MBI Opus, we have my daily trend trade. I can show you that one right here. Alright, let's find our daily. Well, this is the ES that's currently in its long trade right there. This is the NQ, which was trading, and this was the last setup that it went ahead and did from it. We can look at the NQ performance report. A little bit lower win rate than BES, 79%, 2.71 profit factor. That goes back to 2004. Let me go to my win, because I've got this screen shrunk down so I don't have everything in front of it. I would need my ES 78 minute. Well, here's the Apple. I believe this one is trading the Apple setup. I have the strategy active on this one. Yeah, this is the Apple 78 minute. Has it made any trades on this one? Doesn't look like that. Easiest way to find out. I don't know if I did the settings. I may have been in the process on this one. This one does 57% intraday, 1.25 profit factor. Let me see that other Apple chart. Okay, yeah, here it was. So this is the current 78-minute Apple trading right now. And what it does is it basically says in red trend, it shorts, looking for a portion of the ATR, and in green trend, it goes long. So currently, it's short as we speak. Slide this over so you can see the entry. So here was the first entry, 522 it sold, and then covered at 520.87. And then right now, short at 521.26. Alright, so this is doing this live. Let's go ahead and take a look at the performance report. Alright, so you can see it's much more effective to the long side than it is on the short side, even though the short side wins more. So what would you rather? Would you rather win more and make less money, or win less and make more money? This is a tough debate because I have plenty of systems that win 50% of the time, but will win twice as much as they lose. But most people don't want to trade them because they don't like losing. And it's more about the win versus, being able to create a nice portfolio. So that's, everyone has a different approach. And that's just one of them. So there you have this. When it was green trend, traded long. So it parses the market based on the overall trend move and then trades at 78 minute. This also does the same thing. I don't know if I have it on this one. Would be the ES 78 minute. I don't think I have it on here. Those are dailies. Because on the ES 78 minute does the exact same thing. No different than these 50,000 tick charts are set up with similar strategy setups. I don't think this one's active. Alright, well yeah it is, but it just hasn't made a trade recently. Oh, here's the last trade it made. It doesn't show up on the other side of it. So this one's winning only 60% of the time. But it's 3.29 profit factor, and that's because it's seeking, and this is off of that orange dot that I was showing you. This one would be that members happen to have within this configuration. So it's seeking a much bigger target, and then when it's entering one after a certain number of bars, sets a break even. Because it says, okay, if it hasn't achieved its goal within a set period, it will go ahead and then exit. And this is what you see when you have strategies where it will buy it, tell you how many contracts it bought at that particular spot. Yeah, now it's an interesting thing because I had a couple of guys contact me from the Chicago board. They wanted to see me put the indicators on an actual options chart. I haven't done that. I told them I would get around to it. They were like, been following your stream from the beginning because, it's very interesting to us, and we would like to see you do it for an options chart. It's like, well, for me, coming on to StochTwits was more about the education and teaching people a different approach to markets. It wasn't about, helping some struggling hedge fund guys, move, though I do have plenty of requests to actually, start a fund and do those kind of things, but, it's an opportunity to share. Oh, the one that I just showed was an orange dot. Let me go back to it where I had it in my setup. So members, those who are trying them out right now, they're getting just the MBI Opus stocks, which that's the one you saw applied on an Apple Daily. It's these orange setups that also go to members that have them. But the daily trend trade is also futures that trades daily based on the trend. And so where you saw my ES Opus, the daily trend trade trades each one of these days, and when it's green trend, it looks for a percentage of the ATR each and every day. So if we go here, we can put ATR on here. There it is. All right, so for instance, and it's adjustable. So the ATR is 22 points total. So typically it will look for about 25% of that. So let's just say 4 points. So it will buy at the end of the close and the opening of the, what we would call after hours, and it'll buy looking for a 4-point move. And the stop will be about 12 points, and it'll vary depending on what you have set up in there, but that trades each and every day from an automated standpoint as well. So there's just plenty of different features. It's all about what you want to use, and then this is where that 10,000, because I hadn't even explored this avenue. Oh, here we go. Okay, so this has made it a buy. All right, so let's go back to our future setup. We'll buy some more. Order filled. Okay, so that will give a different overall setup. Now, if we look at the performance report on this, like I said, it's winning roughly 80% of the time. Now, this is an intraday, 10,000 tick. I want to say that's got to be kind of a 30-minute chart, somewhere in between there. Typical, from a regular day standpoint, if you're trading, depends on how active the day is, of course. But this is going to seek a very specific ATR. Now, in order to find out what that is, we're going to format our strategy. And go to format. We can see what the setup is. So the ATR in this particular case is at 1.2 for that setup, but then we need to look at specifically what program bought. Okay, so this was the MBI that bought. So within that format, we can look at the configuration. Okay, so the MBI has an ATR of 1.2. Each of these can have independently different ATRs. Okay, so your ATR can be anywhere from, I always recommend that the ATR not go less than a 1.2, and the reason being is, if you're going to have a stop that's a 2, you'd have to win 66% of the time just to break even. Well, it's not interesting. And this is where, for me, fine, we bought at this particular case. I'd love to buy at discount. If I actually get a drop back again, now that I've seen the signal, I would buy additional in there because, that's something that the computer's not going to do. The computer in red trend is not going to look for a discount. Can I program it to eventually do that? Yeah. And then we'll, be able to take it from there. But look at the shift in that 10,000 power mode from short speed control. And this is where I talk about that ratio. See how big the difference is between the two? Now look at how tiny it got right here. And that was a representation of these buyers sucking up the number of shares every time someone was shorting into that setup. And then boom, it turns around. And, the signal's given away. They can't hide anymore. Now, hold on, I got a little bit of stuffed up nose here. Sorry about that. Wonderful kids all have colds. That's always nice. Now, we also have this one in a 5,000. Let me find where I have my 5,000 chart. Oh, VIX from a daily standpoint. Sometimes, because I've truncated my overall screen so that I can see the live content. Let me find the ES 5000. Did I pass it? I know it's in here. But we'll see it. I'm just looking at it. Because I've set up both the setup within a 5,000 tick as well as a 15,000. Oh, here's PC. Okay, this is the same concept. Here's PCLN from that same 78-minute strategy. If I slide over here, you can see it when I click the strategies. Oh, this is a little bit of a variant. I haven't released this one to everybody. It's off of a new trend model as a variant. Seeking a little bit different setup, but you can see it's looking for green trend, and each bar within a 78-minute chart, it's capturing a portion, and we can see the different trades as we go here. So 655 sold 656, 57 sold at 58, 58 sold at 60, 61 sold at from a 60 buy. Here we had a loss. Couple of dollars there, and see, it changes as the ATR changes, so that's all fine and dandy. I haven't looked at the performance report in a while. Yeah, kind of weak. 69% win rate, but 2-point profit factor. Hard to object to, that kind of profit factor. And I think I only have this maximum 2 positions. Yeah, it's only 1,000 shares time on that setup. So this is 4 years, 10 months, 19 days. It'll also tell you the time in the market. You can go through all these details. In fact, you can expand this, and it will reflect the current open position, what's going on. Select the profits, all those details. How much time is in a losing trade, a winning trade. Your largest percentage winners. I mean, you can get into a lot of specifics. Consecutive winning trades, 36. Consecutive losing trades. And this gets into a whole different issue because I'll often look at the ES Opus because I'll say, okay, fine, I lost 2 in a row. I'll probably increase my size going into the third one because I know that the odds of 4 consecutive losses are minuscule. When you look at it from those standpoints. In fact, if I go back to there, we can look at that from the Opus standpoint, what the largest consecutive losses are. Okay, right here, maximum consecutive winning trades, maximum consecutive losses 4. So going back to 2003, the most it's lost is 4 in a row. So if I've gotten to a point where I've lost 2 or 3 in a row, you got to think about it. What are you going to do? It poses some interesting probabilities at that particular point. Now, from an installation standpoint, it's interesting because when we have like this expanded ratio histogram, when you look at some of the different things, the color for this orange, and that's the reason I put it as orange, it doesn't come out orange. You have to customize that color. So in this particular case, I created the custom color orange, and I can make it lighter orange, darker orange, add that to my custom palette right there, select it, and then boom. And that's because there is no orange program. Alright, so when this first appears, it probably, depending on the default, appeared as a blue dot, and some people ask me, well, why is there a differential between the distance between these two? Well, what I wanted to be able to recreate for you was the ability to see that you had more than one dot, because if they all appeared at the 2 below, they would be on top of each other. What good would that do you? None. You wouldn't be able to see it. So these are some of the uniqueness. Now, particularly when it comes to the dot alerts, just like I was talking about in the overall programming, some dot alerts are going to appear because the plot standpoint. You know, I have this reading, but say there's 2 or 3 conditions that I don't want it to appear. What I do is I just say no plot. So we don't see it from our chart standpoint, but unfortunately a dot alert will go out. And what does that do? It impacts the orange dot on those that'll give a signal that you don't see a dot. Maybe it's about 2%. And I'm going through the programs now to be able to eliminate those. It's just a lot of extra work, because it's easy to say, oh, don't put a dot in when this particular situation comes. It's another thing to try and put that in there. Say, don't create the dot in the first place. There's a lot more work. Yeah, and, that's, well, again, 50-50 is fine. If you can win 50% of the time but win twice as much money, why wouldn't everyone take that? But I can't get a lot of people to go for a strategy that only wins 50% of the time. They just won't do it. Don't ask me why, because there's an ego element to some of these things. I'm kind of past the ego thing. I really don't care in general. I mean, yeah, I want more people to follow me because I want more people to be able to have an opportunity to take advantage of some of these things, and from the cost standpoint, the money is used for my wife's charities and that, so why not? It helps people. I mean, gosh, just from NBI memberships, what did we feed? It was almost 400 and some on Thanksgiving. So there's some extra elements to do with it, but it's just different approaches. And there's nothing wrong with what you see from, the technical analysis stuff. It's actually, I like to point out that some of this stuff's a little bit slower now because computers are a little bit more active in these overall setups. And ignore that and pretend that it doesn't exist is sort of like, pretending that, the real world doesn't happen. And it does. And it's to say that, people, we got to do a debate on, what's manipulation. Well, if you have enough money, can you manipulate price, particularly in a short time frame? Absolutely. People say, oh, well, Apple's too liquid to do that. No, it's not. It's not. This is why you see those kinds of moves take place after hours in a variety of different setups. It's not impossible. So I just thought I'd point that one out. I'm going to go ahead and end where we're at right now. But definitely, always good to see everybody show up. Hopefully you'll, turn on some friends, have them come by, check it out. What we may even do is trade some of these individual stocks from their overall setups. That would be kind of fun. Particularly if we get a signal. You get kind of flat. Usually in the last hour, we can get a little bit more volatility from the setup. Yeah, a little bit flat there from Google standpoint. Let's get that back to a 10-minute chart. PCLN flatline. Now see, after that 6 bars, that signal sort of negated. These guys didn't get what they wanted. You're going to need to see another buy setup in there. It's still fairly bullish, though, from the power momentum and that. Nothing's changed there. But when you have a low volume, it takes them longer to build up enough of a position. And normally we're seeing that they bought enough to show the dot in the first place. And it's interesting that it's only orange dot, guys. So I don't know, maybe they need a larger position. And if you retire, well, what I've done, because to me the code is sensitive, is members that have been with me for a long period of time, I offered them extended time periods to own to have the indicators, in some cases up to 5 years. So from that standpoint, I understand what you're saying. HLF. Let me put it up here real quick while we kind of talk about that issue. So, but what I don't want to do is I make the indicators a monthly basis simply because it's sensitive material. I mean, there's a lot of years of programming into these setups, and I want to make sure that those who are getting them are actually going to utilize them, and I don't want someone to feel like they're stuck into a setup or something like that, because it's not about that. It's not going to work for everybody because some traders just won't follow what they're seeing. They have an idea about something, and it tells them, not to do something, but they're still going to go ahead and do it. Well, it looks overbought to me. I'm going to short it, even though they're looking at a power momentum with a rising histogram, and it's like, okay, this is not ready yet. But it's still going to happen. Well, here's a 10-minute HLF. Is that? Did you want a different time frame on that? Nice buy setups there. That was a beautiful one this morning. Oh, this is that Herbalife. Sometimes people give me a signal or a symbol. I have no idea what the company does, and it doesn't make any difference. Because if there's enough interest, I'll see the fractal setups. And we'll go from there. Did you want to see it from a daily? Let's put up a HLF from a daily. All right. Yeah, we talked about this. It was pretty ugly from checkout setup, but it sort of moved over here and it stopped. It's overbought. And again, some people would see the red dot and they would say, oh, I want to short automatically. Well, you're going to short into the rising shakeout setup. And in this particular case, and we talked about this the other day too, because the orange was below, and I said, well, this is going to resolve to the upside, not to the downside. And this is the exact opposite of what we were talking about from the ratio size signal back over here, where the yellow is above. That's a short, much broader short. You can see how even back over here, you knew that this was going to be a longer term short, even though price really didn't move that much. And only now did it trigger down below, and you almost have your short cover signal, not quite. And that's probably because when we dip below this line here, you would expect this to come up, get overbought, retrace a portion, somewhere back down in here, and that's probably when we'll get an additional buy signal. Just throwing that out. But from an intraday standpoint, there it is. You want a higher time frame? Let's do a higher time frame. That's a 10-minute. Let's look at it from, let's just say 30-minute. What the heck? You can pick whatever time you have the indicators. This is when someone came in and they said to me, can you send me the alerts? And I'm like, but you already have the indicators because you have TradeStation, you have the trial. You can set up whatever chart you want, and you can have whatever indicator you want at that particular time. If I wanted to right now, I could turn this one on, and I could click alert. So if let me just slide it over. We'll do it right here. So we can click alert, but let's do it through the format, because it'll be clearer for everybody. Go to alerts, enable alert. Well, I can have it alert me continuous, which would mean it happens, or I can have it alert me once per interval is what I prefer. And then it will send it to this email. I could have had it done typing. This is why everything you get comes from the dot alert, so that it's not, publicly shown to everybody that you've got this particular signal. The beautiful thing about this channel is that it reproduces, replays, so you can go back and watch it at any time. And typically I break them up and I'll put them on YouTube, so you'll find them under the live events setup, and gives it frequent. But we'll take a break. I went way too long with this setup, but I wanted to show some of the unique things. Oh, let me make sure I turn that alert off, because I don't want to get... Yeah, I did. Okay, because we already get plenty of alerts in. See, that's what's happening in our radar screen. Each one of these little white dots represents that those alerts are activated, and for each of the different time frames, they're all signaling all these setups. And that's what's fun about that. Now, you look at these subtabs, all right here. Well, I can have these alerts set up for any different one of these. These are all the NASDAQ 100, S&P. These are ones that offer weekly options for those who are interested in that kind of setup. Those who like ETFs, all your ETFs. So The options are unlimited. Could I show you every possibility? No, I couldn't because there's just too many of them. So we just try and simplify it to a point. And that's why I took it to 30 minutes, because it just got to be too much overall. So just try to make it a little more reasonable. Gone nowhere with our futures setup. Nothing you can do there. It's just kind of holding. So we'll call it for now. We'll be back. We'll do it again. Have your thoughts, questions, get everyone together, let them know. I'll post when we're going to do it again. But as always, you can continue to leave comments, and I will be able to see them, and we can go from there. Trade well.